Good morning, Bitcoiners. Hello, and welcome back to your Bitcoin economic calendar, the news and analysis you need to start the week off right in Bitcoin. I'm Mauricio Di Bartolomeo, co-founder and chief strategy officer here at Ledn, and today is Tuesday, July the 12th. We have a pretty active week ahead and a pretty exciting show for you today. In today's issue, we're going to start by talking about inflation in the United States. The June report is due this week. It's due tomorrow, and the White House and analysts expect this report to be hotter than expected or higher than anticipated. So we're going to cover how that could impact markets in the week ahead in the near term. We're also going to talk about the start of the second quarter earnings season from US corporations. They all start reporting this week. And again, we're going to talk about that, how that could impact markets. And last but certainly not least, we're seeing global currencies essentially melt against the US dollar. We're going to go through what those are and what impact that could have on Bitcoin markets and broader markets in general. So lots to cover today. Grab your coffees. It's going to be a great one. And starting as we usually do with Bitcoin, we see that last week, Bitcoin saw some green, closed the week higher by 8.08% at 20,850. However, so far this week, we've seen that it's given back most of those gains. So far this week, down almost 5%. Currently trading just below 20,000 at 19,000, around $19,900. Now, before we dive into how what's happening in the markets could potentially impact Bitcoin, we want to talk about what's happening in the US dollar, as that is essentially impacting most economies and most asset prices in general. And the US dollar has been on an absolute tear. This is the US dollar index, which is the US dollar versus its main trading partners. The trend speaks for itself, and we see here that in the last 3 weeks, it's actually gone up by essentially 1+% each week. Now, this is the US dollar. This 1% week on week moves have huge impacts on the broader economy because it is the reserve currency essentially for the most of the world economy. Now, as inflation problems globally turn into social unrest, investors are selling local currencies in favor of the US dollar. Additionally, uncertainty around the state of the European economy has caused the euro to reach parity with the US dollar for the first time in 20 years. We're going to talk about this in a second, but more broadly, this headline from the Financial Times summarizes the current state of affairs quite well, saying the dollar surges and stocks tumble as traders weigh global growth outlook. Now, what is also noteworthy is that interest rates for US bonds have remained relatively stable since May. Here's where we want to show this. Let's just show the yield on the 10-year note. And as you can see, it's basically trading at the same level that it was in early May. It did bounce around a bit, but it's essentially at the same level where it was at the beginning of the month of May. Now, again, the yields have remained stable since May, and the US dollar index is 5% higher since May. So let's just look here what the US dollar has done since May, and it's a completely different picture, right? Like we see very clearly here that the US dollar has actually gone up significantly relative to where it was in May. This is the same chart, and we can see that the US dollar is up essentially 4 to 5% in the same time frame where the bond yields have remained stable. What this means, in other words, is that the real return of the US dollar hasn't changed much since May. Let's remember that the real return of the US dollar is the rate of return on the bonds minus inflation. And with those two being relatively stable over the last little bit, that hasn't done much for the real return of the US dollar, which means that the increased demand for the US dollar is not being driven by investors that want to get higher or better risk-free returns. Rather, this new demand in the US dollar is likely driven by a flight to safety effect that you're seeing across global currencies as inflation hits and inflation slowly turns into social unrest. People flight to the safety of the US dollar. We're seeing this happen in real time. Now, in some ways, a higher dollar is good for the Fed, as a stronger US dollar means cheaper imports, which puts downwards pressure in local inflation in the US. However, the US economy still seems to be doing quite well, as there are 2 job openings per every unemployed American looking for work, which means the labor market is a really strong position. Now, on on that topic, this was the data that came out last week, which was a huge payroll report last week for June, much higher than analysts had expected. And essentially what this did is that, as the headline describes, it theoretically pushes the recession fears into the corner for now, as it's not likely that the US economy is going to go through a wave of unemployment. And that, again, is a huge catalyst when things are heading into a recession and layoffs just keep accumulating. We're not seeing that happen now in the US economy. Now, to the Federal Reserve, this means that the Fed still has fiscal room to increase interest rates. Fiscal room is essentially how much can you do before getting some political backlash. And it seems as though the pieces are in place for the Fed to keep getting this, to continue having fiscal room, to continue increasing interest rates. Now, the question of how much to raise by, or how much can the Fed continue to raise, could be determined by June's inflation data, which is due tomorrow. And on that topic, the White House already kind of hinted at the fact that this report from tomorrow could be highly elevated, were their choice of words, which means that we're likely going to get a new record-setting inflation reading for June, which means that inflation isn't slowing down, which again feeds this idea that the Fed can continue raising interest rates. Now, again, all signs point, according to what analysts say and the White House, that this will be a new record-setting inflation reading. A number above 8.7% would certainly embolden the Fed to potentially raise rates by another 75 basis points in their next meeting, which happens in July 26th, which is just 3 weeks away from now, roughly. Now, we've talked a lot about macro and the US dollar. How could this impact Bitcoin? That's the question on all of our minds as Bitcoiners. Now, a stronger dollar puts a headwind on corporate earnings, as a US company that has overseas revenues and overseas earnings take a big hit because the US dollar is now much stronger and they can convert a lot less dollars back. This will likely cause some earnings guidance headwinds for US companies. Let's remember, this week we enter into the second quarter of earnings, and the earnings guidance from these companies could be tamed down as they report. And this could then put further pressure on equity markets in the weeks to come. Remember, the earnings season starts this week and it'll run for probably another 5 to 6 weeks as all the companies come and report their results. Now, similarly, higher interest rates outside of a higher US dollar will also have an impact on company valuations and share prices, and it will particularly impact technology stocks because they have a higher amount of their earnings out into the future. And the fact that interest rates are rising means that these future earnings have to be getting discounted at a higher interest rate, which results in a lower net present value, therefore lowering the valuations and their prices. So again, as we know, Bitcoin has been quite correlated with equities over the past few months, particularly the NASDAQ, and selling pressure in tech stocks could translate into selling pressure for Bitcoin, depending on the results and how equity markets shake out as these earnings come to light and as the Fed goes into their meeting on July 26th. Now, the weeks between now and the next Fed meeting, which is July 26th and 27th, could be quite volatile. And a lot will depend on tomorrow's inflation reading. More details on that report in our next section right now. And in today's What's Ahead for the Week section, we wanted to spend a minute discussing what is happening with the US dollar and some currencies around the world, as we think this is a very important trend that will ultimately impact Bitcoin. And to summarize it, the value of most global currencies relative to the US dollar is plummeting. And we wanted to show you some graphs and articles to highlight exactly what's happening in a geopolitical level and what is leading to some of these changes, how that could impact Bitcoin. So let's get into it. So the chart you have on your screen right now is essentially a combination of currencies relative to the US dollar since the start of the year. What I'm trying to show here is that these are all major currencies from major economies that have shown incredible devaluations, incredible loss of purchasing power relative to the US dollar in just short 6 months of the year so far. For example, let's go through this chart right now. Since the start of the year, the Argentinian peso, and this is according to official data. Let's remember that this is far from what people on the ground are experiencing, but according to the Central Bank of Argentina, the peso has lost 23 and change percent of its value in the course of the year. The Japanese yen has lost almost 20% of its value. The Colombian peso has lost almost 13% or almost 14% of its value. The euro has lost almost 13% of its value to the dollar. The Indian rupee has reached a record high of US dollar. That means that there's a record high number of rupees needed for a dollar, which is a record low in the value of the rupee. It has lost almost 7% of the value of its currency so far into the year. And the Canadian dollar has lost almost 3% of its value over the course of the year. This one we put in almost as an anchor, as it's the one that has fared relatively the best actually compared to all of these other economies. Again, these are very, very big numbers, and they have huge impacts in these local economies. Let's go through some of the headlines that may not have been picked up too much by Western media, but they are very important and have a very big impact, very real impact nonetheless. One such headline is what's happening in India. This headline is from the Economic Times. It's one of the major publications in India, and it talks about how the rupee hits life low versus the broadly stronger US dollar. In Japan, as we just saw on the chart, the Japanese yen has reached the highest level in 2 decades. This means the lowest value of yen relative to the dollar in 20 years. The US dollar also reached parity with the euro this morning. It's within pennies away. Again, this is for the first time in 20 years, similar to what we are seeing in India. Huge impacts as well here. A lot of Latin American currencies are hitting all-time lows as well. This includes the Colombian peso, the Chilean peso, and Argentina is also taking a massive hit. Again, this is just broadly happening across Latin America. There are protests and other conflicts in places like Peru, Ecuador, etc. So this is not a trend that seems to be slowing down anytime soon. Now, I can speak, just to bring it back to this for a second. I can only speak to my experience in Venezuela and Latin America, but life has taught me that the inflationary playbook is very similar among central bankers and politicians across the world. Inevitably, it starts as a normal bout of inflation. However, local politicians will quickly start losing the grip on society as inflation turns into protests. See what's happening in Sri Lanka, for an example. Now, in an attempt to prevent runaway inflation, most central banks will try to enact emergency interest rate hikes, but most of these are or will be futile in taming inflation or unrest, especially if this inflation is driven largely by sources outside of your control, like a war in Russia increasing the prices of oil. One such emergency interest rate hike is happening right now in the Bank of Korea. Now, what will likely happen is that politicians will start asking people not to speculate against their own currencies. And again, I remember and laugh at this because this was very much the Chavez playbook back in Venezuela when things started going really bad. And again, no surprise, we're starting to see that in Colombia right now. Petro, the newly elected president, is urging Colombians not to bet against their diving currency, which in other words is telling Colombians not to try to protect their savings, which is absolutely insane to me personally. So this is likely, this is not a surprise. Again, to someone that's lived through hyperinflation, these is part of the playbook. It's not something that stands out as surprising. In fact, it's quite predictable to some that have kind of seen this happen before. Now, these requests will also land on deaf ears because, like I said, it's effectively telling Colombians or anyone else that they can't protect their savings. And so governments may resort to capital controls. I'm going to bring it back to the full view here. So governments, as these polite requests land on deaf ears, they may resort to capital controls, a flat-out prohibition of exchanging your local currency into anything else through the local banking system. This will push everyone to the P2P markets. And And having these types of capital controls actually have the worst impact on the most vulnerable members of society, because typically the people that are wealthier in these societies have access to US dollar bank accounts in other places, and they can still continue to transact with a lot more ease than other people in the economy. That changed. Bitcoin and stablecoins changed that game forever. And let's get into that in a second. Now, it is in these circumstances of deep despair and unfairness that many people, like myself, found Bitcoin. Bitcoin and stablecoins can provide a lifeline to people all over the world that find themselves in these types of situations. World economies seem to be heading towards a hostile environment. And far from being a headwind, this is Bitcoin's time to shine. To wrap it up, this week we get a potentially record-setting inflation reading, the start of the second quarter earnings season in the US, and several Fed speeches. So let's go through them now. Tomorrow, or today actually, we get earnings from PepsiCo, and we get a speech from Richmond Fed President Thomas Barkin. There's also going to be a 10-year Treasury auction note. US bonds are going up for sale. Tomorrow, Wednesday, we get earnings from Delta Airlines, and the big, all the spotlight for the week will be in the June Consumer Price Index report, which is another inflation reading that comes out at 8:30 tomorrow. This will likely move the market, so it's important for people to be alert to this announcement. We're also going to get the federal budget at 2 p.m. tomorrow, and another bond auction on 30-year bonds to the tune of $19 billion. Thursday is a big day for corporate earnings as we get reports from JP Morgan Chase, First Republic Bank, Morgan Stanley, and Taiwan Semiconductor, one of the largest chip makers in the world. And we also get the producer index for Thursday, which is seen as a lead up or a leading indicator to future consumer price index. And lastly, Thursday, we get a speech from the Fed member Christopher Waller. Friday, we get more bank earnings. Wells Fargo, Bank of New York Mellon, both report on Friday. And we also get a speech from another Fed member, Atlanta Fed President Raphael Bostic. So with that, we've reached the end of today's show. If you learned something, if you enjoyed it, we welcome you to thumbs up it, subscribe to our channel, and share with your friends. If you don't yet have a Ledn account, I welcome you to check out ledn.io and learn how you can start earning the best interest rates on your favorite assets, Bitcoin and USDC. We have the best rates for dollar loans backed by Bitcoin if you need liquidity and don't want to sell your stack. Our most recent product, the Bitcoin Mortgage, lets you purchase a house as big as your stack. So thank you, everybody. Have a wonderful week and see you next time.